Hi guys, this is Andrea Dillon with No King Co CPAs. I'm, I guess I'm speaking to everybody, clients and viewers. I started this I was just going to talk to our clients because we've been having a lot of questions about these loans that are coming out for Hurricane Ian. I'm down here in Southwest Florida in Cape Coral, which took an almost direct hit from Hurricane Ian. However, um, I understand that non-clients might see this too, so I'm speaking to everybody. So the point of what I want to do today, there's four different loans that I'm going to talk about. I am obviously from my background, I'm recording this at home right now, so if my dogs start barking or if my door opens, I'm sorry, but we don't have school for my kids, so I'm limited in office hours at the moment. So um, anyways, what I want to talk about today, there's four different loans, and I'm going to go through it kind of top level. I should be able to do this in about 15 minutes. This is not meant, I mean, you can make a decision based off of this if you want, but really the next step from this is to talk to whoever your tax professional is, your CPA, or whoever it is that's guiding you in your financial decisions. And to give you a little bit of background information before you speak with them so that they can help guide you as to what's going to make sense for you. So there are four different loans I want to talk about. Three of them are with the SBA and one of them is with the state of Florida. So I'll go through as much as I can top level, and then I'll dive into a couple like frequently asked questions we've been getting, and then we'll wrap up. So the first one, even though it's with the SBA, is actually a personal loan. So the first one I want to talk about is a personal home disaster loan with the SBA. So what this loan, it's not in your business name. You don't even have to have a business. I mean, I can just do it in my name, Andrea Dillon, and it's for damage to my home and my personal property. So like that means like my vehicle, my camper, my boat, like whatever it is I've got that I can touch. That's the damage we're talking about. This loan, and I do have my notes on my other screen over here so that I don't forget anything super important. So if you see me looking over, that's why. So this loan is not to cover items that your insurance is covering. So it's definitely going to be in accordance with any insurance policies that you have, because you're supposed to use your insurance policies for that's what they're there for their coverage. And then this is to make up the gap. So if you've got a big deductible, I know we have many clients out on Sanibel who have like $30,000 deductibles on their homes before their insurance starts to kick in. If you have things that are not covered, so like screen cages, a lot of times here in Southwest Florida, people have pool cages and they don't opt to have that covered by homeowners insurance. So that's going to all be out of pocket. Landscaping, a lot of times, fencing. So any of that stuff that's not covered, you're golden. But if it is something that's covered by your insurance, I don't know what it's going to require yet, because this is obviously brand new loans. They're specific to Hurricane Ian, and it's October 11th when I'm recording this, so it's still pretty recent. But I imagine they're going to want to see proof of your insurance policies if you've got them, to make sure that you're using the resources that are available to you. This loan is made to pay for damages. So it's not a loan to take out $100,000 towards damages to your house, decide to only repair $50,000 of it and keep the other $50,000. I don't know what their auditing rules are going to be, but what I can tell you is you're not supposed to do that. You're supposed to spend it on actually doing the fixes. And then I imagine if you got too much, the right thing to do would be then to pay it back, to pay that loan down, so that the only amount that is outstanding is what you actually used to restore your value in your property. So that is the home disaster loan. Now, the next one with the SBA is the business physical disaster loan. That is basically the same thing as the home disaster loan, but it's for your business. So this one is not in my name, Andrea Dillon. This is in my company, No King Company CPAs. That's who's applying for the loan, which is more so what everybody is thinking, because it's the SBA. So they typically work with businesses. So the business is applying for this loan. And again, it's for actual damage. Now, obviously, that's the same as what we just spoke about. So if my office suffered rising waters, right, and I have to rip out all my drywall because there was water in my office. There wasn't, thank God. But in this example, lots of people here did have that. So not only does that mean that my flooring and my walls and everything have to be done, but it probably took out all my computer equipment and my printers and my copiers and my phone systems and all of the technological pieces that make my business run. That probably has to be replaced too. So now let's pretend I sell stuff. I have a client who is a upscale boutique clothing store, and all their inventory got damaged. that counts for this loan too. That is still physical damages, and it's damages to their inventory. If you're in construction and you have materials and they're in your garage or your warehouse or something and your material got damaged, that counts too. So for the description for this loan, the business physical disaster loan, it's not strictly just actual like real property, like your workshop got damaged. It includes all the stuff that you need to run your business. Same thing as but the other one. This loan is not meant to sit in the bank. This loan is intended to make you whole again. So to fix that property, whatever it is that insurance isn't going to cover, including your contents insurance. So all of your insurance will likely be requested through the SBA in this process. But anything that's not covered is going to be what this is for your deductibles or things not covered, not just the actual damages, but your technology, your inventory, your supplies, all that stuff will count too. The third loan that I want to talk about is also through the SBA. Like I said, there's 3 through the SBA. This one is the EIDL loan, that lovely acronym that everybody got real used to during COVID, because that was the loan for the entire nation, I believe. But it's been closed for a little while now, and they just reopened it specifically for Hurricane Ian damages. So, excuse me, that one is the Economic Injury Disaster Loan. That one can be used, again, that's another business loan, so it's in your business name. That one can be used for all of the same things that the one we just talked about, the physical damages one. So you can certainly use this one to do repairs and to restock inventory and to buy materials and stuff like that. But this one is also allowed to be used as working capital. So you are allowed to leave a piece of this in the bank to rebuild your savings and your safety net within the business after, not really sure what maybe the next 30 days or 60 days is going to look like for your business. So if you aren't comfortable with the amount of cash you've got in the bank because maybe you're expecting a little bit of a lull while people are more focused on getting roofs over their heads than whatever it is that your business is, this is going to be the loan that's going to allow you that flexibility to do that. Now, keep in mind that this loan is used for business. So whereas it is a little bit looser of rules than the physical damage one that you have to spend it to make yourself whole again, this one allows you a lot more opportunity. You can leave it in the bank, in the business bank, but you can't take it out and use it personally. So it's not something that you can just do distributions to yourself as an owner and then go use it on personal property or on things that you want to improve or starting a new business that's a different entity. We always see that where people try to get a little bit creative with their financing. If my business, Noken Company CPAs, takes out this EIDL, really I need to leave it in Noken Company CPAs, make that entity whole again, or use it to further protect and strengthen that entity. Not to start a new Andrea Dillon LLC, go buy a property with it and transfer that money. That's not the right way to use it. So keep that in mind. The fourth loan that I want to talk to you about is the Florida Bridge loan. Now, this one is obviously not through the SBA. It's through Florida. I'm not a huge fan of it, so I'm not 100% sure but it's through the state of Florida. I'm confident if you Google Florida Bridge loan, the website will pop right up so that you can apply for it. They are popular because it has a 0% interest rate for the first year, which of course 0% is a really good interest rate. They are limited to $50,000 per entity. So if my company is applying for it, then I am capped out at $50,000 as of right now, October 11th when I'm recording this. Now, the reason that I'm not a super big fan of these is because they're short term. They have a 1-year term. So that means at the end of the year, I have to either pay this loan all back or I have to refinance it with a different lender so that the issuer, the state of Florida or whoever, gets paid back. I might still have the loan through a different lender. Reason I'm not super loving of these is because a year is really not that long, especially when we go through a catastrophe like we've been going through. So it makes me nervous that in a year you have to have a plan to resolve it. Not to say it's not a great loan option for some people, it certainly is. So that's why I want to share that with you. Now, a couple FAQs that I want to go through on these. first and foremost, it is October 11th of 2022 when I am talking about this. So I'm kind of falling back to my pandemic days when, and I know this won't be to that scale because this is specific to areas in Florida, not the entire USA, but rules were changing really fast during the pandemic. And as soon as we would push information out, it seemed like the next day something was changing. And we did have a few clients who were disgruntled about that, even though we were staying on top of it. As like they literally were changing tax law as we were doing things. So I just want to be really clear that as of October 11th, this is what we are aware of. Now, interest rates. Everybody asks us about the interest rates. With the previous EIDL loans, it was a fixed interest rate. So with these loans, obviously the Florida Bridge is 0%. We talked about that. But the other three, the personal home damage one, the business physical damage one, and the EIDL, those are all SBA loans. Those interest rates are no longer fixed. So I'm reading from my screen over here. And again, this is one of those things I feel like is subject to change. But right now, they're credit dependent. That was not necessarily the case before. So the EIDL loan is looking like it's about a 3.04% interest rate, which is actually lower than it was for the previous EIDLs. And the other loans, the business physical damage one and the home damage one, they look like they're floating dependent on credit. So it could be anywhere as low as 1.875 up to as high as 6.08%. So really the premise is it's going to be dependent on your credit, but it's going to be somewhere between, call it 2% and 6%. The next question, of course, is on the term, which is also a floating amount now. So I'm reading it can be anywhere from a few years all the way up to 30 years. Now the EIDL loans tend to have a 30-year term. I'm not sure if they're gonna keep that the same or not, but it is currently being shared that they can be a much shorter term, but they are still extending all the way up to 30 years depending on your credit worthiness. What about maximums? So the Florida Bridge loan, like I said, max is 50 grand. There's not a lot of wiggle room there. The SBA loans, the business physical damage loan and the EIDL loan, both of those two have a $2 million max. That doesn't mean you have to take $2 million. Let's be clear. You might only be interested in applying for $70,000, whatever it is that you need. But the max is going to be $2 million. The home loan, so the one in my personal name for my personal residence, that one is going to be capped for my house at $200,000, and for my stuff, my boat, my cars, my camper, all that stuff that's not a house, at $40,000. So those are important. Next question that we've been getting a lot is, what if I already have an EIDL loan? So I'm not 100% clear on this, but my understanding is that's not going to prohibit you. It's just going to determine how the application process actually pans out. If you'll do it within the same portal and you'll just request additional funds from your EIDL that you already have, or whether it'll be a completely different loan and you would just have two loans. I'm not sure on that, but I know that it's not going to mitigate you from applying for more funds. So that is a surmountable stumbling block. Now, what if you had an EIDL loan application in process when they shut this down from the COVID financing? Because the EIDL was shut down before they finished going through the applications. Those, you will need to do a brand new application. We do have that answer. You cannot just, they're not going to just suddenly start processing the applications that they didn't get to. You'll need to do a new one. Last I know I'm coming up on my 15 minutes here. Last thing I really want to talk about is the filing deadlines. So not for taxes, but for the loans, the loan application deadlines. So for the physical damage loans, those are the two with the SBA that are for the actual damages. That deadline as of right now is November 28th of 2022. And the filing deadline for the SBA EIDL loan is not until June 29th of 2023. My opinion is to act fast. If you know that this is something that you're going to need, go ahead and get your application in. Filing your application does not mean that you have to take the funds. Let them come back to you with what they're proposing, and then you can determine from there. If we are helping you and we're your CPA, I'm so happy that you watched this first, because now we can jump right into your business, your specific needs, and what the best course of action is for you. If you are not our client, I want to stress this. Please reach out. I mean, you can reach out to us if you don't have a CPA, of course, but reach out to whoever your tax advisor is with this very, very top level information so that you can be guided into what your next steps should be for your business and for your lives. Final thing I do want to mention, I'm sorry I skipped it over in my FAQ section. Free money. So we've gotten that question quite a bit, is, clients that are reaching out and saying, hey, what about, like, with the COVID pandemic, there was the PPP money where you didn't, if you followed the rules, you didn't have to pay it back. And then there was the grants with the EIDL. So as of right now, there is not any free money. These are loans. That means that whatever you take, go into it knowing that this is a loan and you will need to pay it back. So if you're hoping it's going to be forgiven, I mean, my crystal ball is broken, but I would imagine it's probably not going to be forgiven. So that's it for today, guys. I really appreciate you listening in. I've had this conversation probably 15 times over the course of the last 3 days. So I wanted to push it out in a video so that I could hit more people and that everybody could start to listen and come into our conversations with a little bit of basic knowledge so that we could really focus on what is going to be helpful for you, getting your business back on its feet, getting your house and everything back to where it needs to be. And you could make the most informed decision for you that's going to make sense. So please, please, please reach out to whoever your tax advisor is before making your decision on what to do next. And if we are your tax advisor, then reach out to us next. And whether it's myself, Brad, Carol, Martin, Janet, whoever it is that's advising you within my company, we will look forward to speaking with you soon. I hope that you are safe, and I hope that you are moving forward in the best way that you can following this absolute devastation that we've all had to go through for the last, I don't even know now, the last couple weeks. So stay safe, and please reach out with any additional questions. You can reach me at andrea@cpaofflorida.com, or you can call my office at 239-936-6144. Thank you.